It's the weekly 30/30 trading list on the ASX. We're reviewing the 30 best momentum companies over the last quarter and those that have had the most significant improvement in the last week. Gary Glover's been through both lists, 30 on each list, to find the shares and the charts that we can learn something from, the ones where there might be an opportunity right ahead or something that we can dissect to really reflect on to see where the next opportunities, where they may be emerging from. Good morning, Gary. How are you?
Yeah, I'm good, Chris.
Looks like you're in a different background, so you're up here in Sydney again, aren't you?
I am. I've got my former actually, but that's it. It's nice.
Nice. Well, we can just see your face. I know you've got a beautiful view out that window, but the sun's shining there, so it obscures actually seeing you other than a silhouette. So thank you for moving that camera around.
Yeah,
and
outside.
It's a nice view, but we'll focus our attention on the chart. And if we start with the top 30 momentum companies, what's coming out to you? The chart standing out? Anything that you're seeing in those momentum lists?
Yeah, look, only one thing sort of stood out to me really is that you said the winning stocks kept winning, and the losing stocks sort of kept losing. That's so if I was thinking of the stocks that are sort of like been probably back here and look a bit ugly, they still haven't recovered here. And the stocks that have been winning here on the list for quite a while, they keep re-emerging, keep popping. You know, we talked about that in the Mag 7 sort of video there, and we're sort of looking at those strongest names. The thing is, they did go through a bit of a pause and cool off there, but they kept re-emerging a lot of those stocks. You're definitely seeing that on this list here. I mean, I think even just like last week we looked at I think LPM, I think DRE were sort of new names, but they've stayed on the list there. So they've both, I think LPM sort of had that little pop on volume, little tight consolidation, and popped again. I think DRE was the same there, although they're sort of small, had the pop and then consolidation and pop again. But I mean, you've got like Drone Shield, is, you know, there's obviously one that stands out there. That's just kept running for us as well. So look at that block of volume the last probably 6 or 7 days. It's been, you know, it's really sort of going up pretty robust volume each day here. So yeah, it's down a little bit today after gapping up here, but it's probably the first, you know, this is just been pretty robust the whole way through here. So yeah, so just amazing how these sort of leaders continue to keep running there. I think number 4 on the list, AKM. It's sort of interesting there. That's a nice little BCP there, Chris, as well. So the whole thing had that initial, you know, this is what we look for, the sort of these star stocks have that really initial big surge, big volume, then they consolidate, sort of tighten up. It looked a little, and we looked a bit bleak here on this day here. Then it's recovered and sort of tightened up here. So you can see here, it's basically, you know, we've whole thing sort of, you know, tightened up in here, and then we've started to see volume emerge, and then we've broken up there. So it's a nice little pattern actually. So pretty good, had pretty good volume on the break. That did sort of have a little bit of a throwback there, but it hasn't looked back since then. So there's been some pretty nice little setups.
Is that one just an example of, you've been talking about winning stocks keep winning and the leaders keep running? November through January, clearly it's a leader because it's broken out and gone up sort of 4 or 5 folds. Then February through May, it goes through that sideways congestion, the VCP that you're talking about. Is this an example of one where you would have had it on your list through December and January as a result of the strong momentum, but then it's worth keeping on your list throughout that consolidation period because it is taking months to build a VCP, and then it re-emerges as a leader once again? Is this one of those examples of sort of keeping it on your list and the benefit of doing that?
Yeah, that's right. So you have that, you know, initial sort of big surge on big volume. That should be sort of the first thing that stands out. And then you're looking for that sort of period of consolidation. Look, that there are plenty of charts that look like this, Chris, you know, and they can get a bit lighted here and a bit choppy. And so obviously they can be a bit small, being a 20-cent sort of stock in here. But as we sort of start to break out there, that's probably a pretty good signal there coming out the side there. I mean, I would have thought breaking above here, this level here, would have been pretty solid as well. So this day here is probably definitely the sort of catalyst there. Had a bit of a pop there. That's probably telling you that that's looks like it's sort of ready to go here. So it's hard with the smaller names there, but it's still a pretty good setup there. That's sort of something that if you look through all those most of those Mag 7 and look through all the leaders there, they often start like that, big move on surge, and then the whole thing tightens up and then they push through. We've got, I think on the list there, still had the 6 on the list as well. That's sort of still in there. That's just had a bit of a pullback here. So that's sort of, had a great run, had a consolidation, and re-emerged there with that sort of triggered day, a big volume there. Then nothing's run here, but now we're sort of broken the 10 and the 20. So that's not a good sign there. So really, it should have really been, following the 10 here after this really, really aggressive move. That should be, crossing the 10 there should be, you're getting some out, or if not all of it out. Me personally, I'd be completely out, but you might have had some back at the 20 maybe as well. If you like to split your orders that, which I do. But that's now in corrective zone here, so it's sort of that's a watch rather than a trade here now. Got the LGM, was another one there. So that's sort of like, this is a bit sort of patchy there. Probably not the sort of big move you'd sort of see there, but the whole thing has sort of tightened up here. And then there was a bit of a volume surge here. All these days, it's a bit hard to trade these ones, bit small stuff there. Still sort of got that sort of classic sort of setup. MMC. This one's still pretty robust there, Chris. It's had a bit of a pullback there. It's probably the largest correction of the move, which is always a bit of a cause for concern there. That can be like what they call like an overbalance of the trend, but still holding the 50 here. So still got spacing between the last high and the pullback here. So it still leaves it in a pretty strong position there. So it looks like I might want to go up to the hot back to retest the high here. But again, just another strong name sort of just on a re-emerging there. BIO, this was on the list there a few weeks back. And I think obviously we sort of crossed the 50 there, but then it sort of built, it sort of started again here. It sort of had that bit of a pop, then consolidated back here. You'd sort of argue, you'd sort of suggest that maybe this sort of didn't quite sort of sit on top of this little high here, but good volume here and then pull back on pretty light volume. Then we're sort of starting to see volume, popping up on volume. You sort of the whole thing tightened up here underneath the high, and we've popped through there. There's that little David Ryan sort of signal there. That the tightness underneath the high there. So I think EZZ as well. There's that sort of same pattern again as well, Chris. Sort of even that sort of like it's been running pretty hot here. Did run up to this high here. Look at those 2 or 3 days there. It just did, when you see that tightness there, it doesn't sell off. And then you pop through a high again, it can really go again. But, it can be quite explosive as well. So when you see those stronger stocks struggle to go down like tight, have those little 2 or 3 days, tighten there. I mean, the interesting thing about that is that professional traders will still look at that and trade that because the whole thing tightens up here. You can put a pretty tight stop on it. So if you did a position in here, you see the whole thing after 2 or 3 days, you tighten up here. You basically, you probably sort of go into your, you might zoom into your half hourly and stuff there, and then look for look for a stop here to, to swing low to sort of use and hit, so you might see as it doesn't just basically keep building here. So you would actually be able to keep it pretty tight there. Put a stop in here, just what might be, what's that 116 or something there. So you might, might put it at 115 or 114, just a couple cents below. So you're sort of buying it with a pretty tight stop there, only a couple cents. And then if you're wrong, then you're not risking much. And the thing pops out here, like you think hope it does, then you're up here. I mean, this is up, 25, 30 cents here. So you could have had like a 2 or 3 cent stop there. and then, say it's 3 cents and you're making 30 cents there, that's 10 to 1 risk reward. So that's, that when you see a little tight pattern as well, that's just a pretty good setup here. So,
well, just on that tight one there for EZZ, I've loaded Iris on my own to get the dates right. The 13th of June, so that wider day where it sort of makes a new high and then it pulls back and holds 14th, 17th, 18th, and the 19th. Those 4 days that come after the wide range on the 13th. So there's 3, if you come in from the right, the June, so just on June there, those 3 down days with the red bars, and then the green day after it, so a bit further to the right, just where it comes up to 120. Yeah, there. Yeah, so that day and the 3 days to the right of it, from David Weiss's book, and he's referencing Toby Crabble in his books, that's that 4 inside day scenario where those bodies are actually inside the day of the whole range of the 13th, which is rare. But we keep finding it in these charts that you're surfacing because you're highlighting the strongest companies on the ASX. But that there is a rare pattern. And as you said, David Ryan's style of things, it's right congested under the high. From a Toby Crabble, David Weiss, they've looked at the odds, and that's just a real premium setup there.
And we've seen quite a few of them, Chris, haven't we? Really, in the last couple of months, we've seen a lot of that tight price action coming from the stronger stocks. They're having a little tight pause.
Yeah,
we've seen it happen under a lot of highs as well. Where it's funny, this chart here, see how it's sort of like had a pretty decent move here, and then it got a bit choppy here, but lightly traded here. Kind of reminds me a little bit of I think it's SKS has had that ran here, tightened up here. Now the thing's just closed outside the range there yesterday. This one's been hyped to trade, Chris. It's pretty. I think before I looked here, I think there was like 5,000 shares at 85 or 86 on the offer. So there might have been only 4 lines of stock on the offer. Market completely. So hard to get set. Probably even harder to get out if you had to go the other way. But those lightly traded stocks there can push on, as you're seeing here. So that's just another classic sign of those sort of the strong just continue to stay strong here. So nothing wrong with that. That's broken out here yesterday. So bit of volume the last couple of days there, but not much stock around there. So
but that's another example there. I think it's what day is that? The 11th of June, 1, 2, 3 days after it congested within that range completely.
We're talking about here or
where there's a big green actually. So trying to transpose my chart looks a little bit different to yours, while it is the same. 2 green days.
There's a few tight days in there, like 2 or 3 days there, like basically. But then, this little BCP.
7th of June. Yeah, if you look at the 7th of June, where it's got a slightly lower tail, a bit to the right.
But you see it's pulled back there, tightened up here. So once you break that little E wave there, so once it goes above 76, it should be off.
Yeah.
I think that hit 76 there. I think it opened at 76 the next morning. So then, then you're off here. I know it's hard to trade, but and I wouldn't go too hard there, just only small passes only. But still good setups there.
But yeah, so I'm diving deeply down into 4 inside days, but I'm sure you've got other charts as well on the momentum list.
Yeah, they're all sort of similar, mate. I should show that one. I'm sorry, FD. So I mean, just look, a lot of these names that have been on the list for a long time, are just staying, with momentum there. So I saw one of the I was listening to Ausbiz during the week there, and I know one of my workmates said, James Garrish, talking about the market, just saying that, the leaders just keep, like the winners keep winning, and it's like the banks and stuff there, obviously not, they're outrageously overpriced there, but they keep going up, and so it's a real swing there, and I think it might sort of stay that way until the end of tax year. You and I know we've done a few of the tax, looking at some of the worst stocks. So I was actually sort of thinking there that with the Mag 7 there, maybe we should have the dirty dozen. So like the worst performers for the year in terms of which ones might be able to bounce back after tax selling? Because we know that if you've been weak for a lot of the year, you remain pretty weak into the end of financial year because it just sort of causes that sort of ongoing tax selling. So you can, those uglier names can jump there. I think in the past there, we've sort of covered probably 10 names. I'm pretty sure we've had 7 out of 10 or 8 out of 10 each year. Probably bounced 10 or 15% after the tax selling there. And that's like usually within the first couple of weeks afterwards. So not there's a few strategies around that, but yeah, it's not really in our lane that we're looking here momentum, but it's definitely something to be mindful of as well with the winners, because you're not going to sell winners coming into a financial year.
Well, I remember you doing that report I don't think it was the first year we did it, but I think it was coming into June 2018. And Telstra was an absolute dog. Telstra had been one-way traffic for 3-4 years, and it pretty much hit the low around 30 June and then sprung back very quickly. By the middle of August, it was one of the best performers on the ASX, definitely in the top 200. Yeah. And I remember looking at that off the back of your research, and I think that was a year where there was maybe 8 out of 10 were just killing it after that. So that was, I really enjoyed that research of yours that you did, and we covered that year.
To the Dow, obviously the dog to the Dow theory about buying those worst names, they tend to perform pretty well. So I think Telstra was up 40% that year after getting smoked that, just sort of getting all the way, trapping all the way down. But, digress here. But again, here's another name that's been on the list for a while, Catapult, still firm, Chris, just sort of had that nice little consolidation there, little triangular sort of pattern there. I think I mentioned there, I love what the CEO was sort of saying here in the recent interview. Just couldn't see this one getting sold off into the year end. So it still looks pretty firm here to me. That's good volume into the high, consolidated, lightened up here on the pullback. No one's selling this thing. It looks like it's in a pretty good shape here. So I don't think any fund managers would be selling this after hearing the CEO's comments about where they're at, moving into profitability and focusing on earnings rather than sort of revenue, So it looks pretty well placed as well. So just another stock there. It's just kept running. Like all these stocks here have just been running. So probably going to be mindful coming into June 30 as well. Maybe that's the timing for a lot of these things to finally sort of cool off. Yeah, you might run into the end of the financial year, then maybe sell next year. I do. But yeah, here's another one. SXC just had a bit of a pause there. Had like a little bit of almost like a bit of a rectangle up here. Bit of a flag, you might sort of say here. But again, we sort of probably done this little false break here. I think we've seen a few stocks do this, have this little pause, go slightly lower there and then reverse there. That's not a bad signal, actually. I've sort of been thinking about that quite a bit, actually, recently. Just watching those sort of stronger names that have been running for a while, watch out for this consolidation here. Just watch for a little false break. Like, you might have thought this might have been one here. Would have, you might have got on okay there and had a move and got your stop up before you got knocked out. But this was a good little signal here as well. We've seen quite a few of those recently as well. Some of these stronger names just come down a little false break and then turn here. I normally, I do trade false breaks, but I normally just trade them on the bigger names. One of my rules is to only trade false breaks in the top 300. But I am thinking about maybe allowing some of these really strong momentum names that are maybe over $1. I don't want to trade the small ones, but maybe something with a bit of a market cap that's been running for a while, like maybe at least 6 months. I might introduce that in there because there's just some really good signals there. Nice false breaks of some of those. I'm sure SPR, Spartan as well. I think pretty sure that did a little. Yeah, this did that little consolidation, a little false break in here, and then bang, it's gone again. So just watching for that little false break and maybe the volume to come in. So just noticing that quite a lot in these stronger names there. What else we got there? I think that's it. But the one that I thought was interesting here, a bit of a smaller one, was M4. So at a pretty, like this is again, this is what all the good stocks look like to start with. They have that big move, big rapid volume there. So I think these guys are like iron ore, and they've just had a few drilling results and a few hits. As a result of that, I think they're doing a few more. They're doing another drilling program. So it's, yeah, it's a bit risky being drilling there, but they've obviously had some good hits in a reasonable zone there, and they'll probably do some more drilling here. So maybe people tend to get a little bit excited as the drilling program sort of goes on, and then if you don't get any more news after a few weeks, they might get worried then. But normally you get a bit hot. This is pretty interesting. It's just the whole thing sort of tightened up here, and don't know whether it's just going to come back. I was actually sort of thinking maybe, seeing all those false breaks there, thinking maybe this might just come back here to 2.7 there. Maybe it just flirts with the 50 as well. But definitely one to keep an eye on there. That was fun. Pretty interesting, pretty tight action, pretty good volume there. So that's what a lot of the stocks that have been running for a while, they look a lot like that. So,
That's a high tight flag, and again, it's like 5 inside days after, which is rare to see in a high tight flag. So, and the volume conforms with all the things that you're always looking for, and the congestion, the pullback in volume. So,
yeah, there's one the other day, that little IRI. Remember that one had the little tight flag. Looked like it was going to pop out of here. It fell away, but there wasn't a lot of volume there. Well, it fell away then. That was it. Really, the only day down was the big range there. That's sort of like, that's when you should have volume, because you've gone through a lot of price levels there, but didn't really follow through there. So this is in not bad shape here now. Sort of, even that little tight, even 2 days of tight price action here again, so that looks pretty solid as well. So they can, sometimes those little tight flags there, they can sort of come back a bit deeper there, but maybe, sometimes they might have congested back a bit further before they go. So
that big down day looks like, so breaching the swing low, what David Weiss was talking about in the springs is he imagines it like a boxing ring, and it gets knocked out of the ring. It gets passed out beyond the swing low, clearly breaks down beyond it, closes on its low with larger volume in the last almost month, which is understandable because it breaks the price level. But the very next day, it says, I'm not out, I'm not down for the count, I'm not going any further. And you see that smaller day, that day there, doing on big volume. It says, hey, there's no more volume, there's no more selling, I'm not getting humbled here. And that's what David Weiss says he looks for in the springs, to say, well, I got knocked out of the ring, but I came back in for a fight and I fought harder. And I guess that's why you highlighted this chart, is because it turned around quite quickly.
Yeah, those 2 days there, and they did show the follow through. That was really the only one day, because you'll often see one day of selling, but then as long as you don't see more than that, so it's usually the first day off the highs is usually big, and then then the rest of it dries up. But there really wasn't much of a selling through it here. Might have been a few selling days off the high. I mean, that they're talking about being half or third of the previous rally volume, so pretty light compared to these other days up here. And then the whole thing just sort of dries up in the last couple of days down, pretty light. These couple of days in here, very, very light. And the only day is that one day there. So, but, as the Wyckoff theory, you should, with a wide range, you should be going through a lot of price steps. So what I mean by price steps is, a lot of buy, sell orders will be sitting in the market. So if you knock through, say, 10 levels, you should have the volume should be up. But that's quite normal. That's not heavy volume to be going through that many steps. I think that's basically it there from the.
So that's a quarterly momentum, and then if you're looking,
that's probably the most interesting there, because all those names have been on the list for quite a while. There's been a few that have popped in the last couple of weeks, but that list is pretty. So it's a long-serving list there. Just some of those names keep re-emerging here. I'm gonna go out on a limb and say they're gonna probably stay strong until the end of the year here. I don't see them just getting sold off for tax year.
If anyone's selling it, they got to pay tax this year, as opposed to if they sell it 1 July, they're going to be paying income tax or profit, capital gains. Yeah,
lock it in next year, and you're off to a nice start, green and looking looking healthy from the first week of the financial year. It's investor psychology almost, you know. So so on the
Launchpad.
on the launchpad there, so RCR was sort of one there. Now, I think I sort of mentioned there previously that it's a bit white. It's a bit, you know, what's Kalamagi says, you know, sort of tight for winners, you know, sort of loose for losers there. But we've seen some of these looser patterns actually set up and pop again. So we have seen a few of these sort of wider VCPs actually work here recently. So yeah, so can't sort of dismiss them out there. That's had pretty good volume into that high there. That's pretty chunky up into the high. Then it basically sort of has a bit of a pullback, and then the volume comes in again. It's the next surge. Now look at the pullback here. That's light volume all the way through there. Even though it's come back below the 50, had a pretty deep pullback. So we should be keeping an eye on this one, because in the past there, in the last probably 3 or 4 weeks, we've seen similar patterns there that look a bit loose. Of actually, what they do is they say they're loose here now, but then they at some point they actually tighten up, and then they sort of spring out of the pattern there. So keep an eye on this one here. It might tighten up here. Maybe get a little tight consolidation there. I was trying to see if we sort of see another stock like that that's come up here. But, TYR looks pretty interesting there. Sort of, we're seeing that zip pop up the other day, so that sort of went a little. I would have loved to have seen this go to this level, Chris, and then congest, but it's just got above that level. I guess, but this is definitely one to be keeping an eye on there. It's pretty robust, pretty good volume. I think PayPal in the US market, pretty sure they talked about that stock broke out of like a 20-week base. So like, I think if you look at Weinstein's theory there, I think it's, you know, basically sort of going into stage 2, so coming out of stage 1 base. So it's interesting that stock was sort of talked about the same week this popped here, and we've seen High Road have a nice little pop here as well. That's pretty impulsive as well, off the low. So yeah, probably keep an eye on these stocks here. Maybe they'll just come back here, but just interesting. A lot of those stocks were all moving together. I think it might have been WA1, might have been the one that's, yeah, this is a bit loose here. But gee, you know, again, these winners keep re-emerging, keep popping here. So it is a little bit sort of loose out there, some of those stocks there. SHL's had a nice little move there. I don't really like there was a little VCP in here. See this little, did sort of move back in here and then tighten up in there. So I did actually trade this because I like, the $24 level, I think is like the big Fibonacci on the weekly. I think I sort of covered on my report recently. So it's a big level technically. So I think we're seeing Sonic there bounce off the 38.2 Fibonacci, then on the way down, hit the 50%, had a 2 or 3 touches on the 50, back to the 38.2, then it fell to the 61.8. So it's really weird. It's behaving in the FIP. So it's like those sort of stocks that are hugging that. We saw like Drone Shield just hug the 10-day Eric rally. So it just has its personality. Some of them do respect fibs and others don't. So this one was just seemingly bouncing off the right sort of fibs there. So it get down to the right level. But I just can't buy any stock. I like to sort of see a little tightening there, and then a little congestion, and then like a little, what I consider still going to be a BCP, even though it's under the 50, but just having that as my little, that's my sort of, my poor excuse for a momentum buy. But yeah, just still having some rules around that as well, even though that's not, you prefer to sort of see this above the 50 at home. The GOAT, Minervini, wouldn't be buying any stock unless it's above the 50. One stock there, but just notice, if you look at all those healthcare names, like Australian Clinical Lab has popped off the low. We were talking about Helios as well. That's had a really nice run. If you look at the weekly chart there, this is the data here, but look at the weekly. So look at all this volume. We've had massive volume on the weekly chart there. So it's like, look at that weekly. That's like accumulation, Chris. That's a big, chunky, So it's sort of, this is building here. So this is definitely one to keep an eye on there. Helios has got a lot of debt. So it's not without its risk there. But that's big accumulation, but it's like sort of people are taking big positions there, betting on maybe change there. So interesting as well. So just seeing quite a few of those healthcare names actually sort of emerge. CXL was one on the list there. This one's still in a pretty nasty downtrend there. Nothing to do here yet. Still really has I think it might have broken one little swing higher a little bit here. But little volumes just come straight back in here. So not quite, I thought this might have been near a low here previously, but this goes to show here, this might be one of those ones that sells off into Jan 30 here, Chris, as well. Maybe it can emerge after there or something, but we'll see. Jumbo looks pretty good. Yeah, maybe keep an eye on this. That's pretty chunky volume here. Pretty solid there. So maybe we'll get a little, little VCP. We've seen plenty of VCPs on some of the bigger stocks, Chris, as well. So I think like Ansell had like a pull back in here, try to pull back in here, they'll tightens up again here. Then like a little breakout as well. So just seeing quite a few VCPs and some of the bigger names sort of pop out there. So even CSL, they had a VCP in there as well. Come out of this little little VCP in here and popped out of there, came back in the range again, but staying pretty tight here. So they're just seeing quite a few. I think what else implicit? BIO, I think that's sort of what we spoke about.
Both lists.
Yeah, CMM.
Back on the list.
Yeah, gold's pretty interesting there. We just accidentally had WGX come up, and that's just breaking out of VCP as well here. That's the whole thing's pretty tight in here, bit choppy, but that's pretty shallow pullback there, and just the whole thing's just been building there from this zone here, and that looks like there's a bit of a breakout today. So it's a bit of a gold's tricky there. If you look through I was looking through gold the other day, I thought the gold price would sort of come back to the level where it might bounce. Went through the gold list. It's just that. It's some of them they look, all of them look completely different. There's not. I wasn't. You hope to sort of see, 10 names all setting up, looking really good. I couldn't see that at all. It's just like, oh, this one looks good. This one looks horrible. This one doing nothing. It's like there's a really, really mix of it. But I guess gold's been a bit like that the whole way. It's we're seeing with the gold stocks there that if you've been on the wrong names, they've actually underperformed. Some of them have actually had some bad announcements, some cost issues. So really got to be trading the right names there. NEU, I noticed this is pretty interesting here, Chris. The whole thing's, it's had a good run, it's had a nice consolidation there. It's been a bit choppy here, but the one thing we know about these leading names is they just keep re-emerging here. So you just got to keep an eye on this one here. The whole thing's sort of tightening up just under the 50 here. A little price action there. I wouldn't 88. I would probably kind of stay away from for a while. It's still that's had a pretty deep correction. It's well under the 50-day moving average there. Has had some reasonable selling on the weekly. So this is not one you should be looking at here. You should be, you want to see this sort of consolidate a bit longer there. But the NEU that's had a time-consuming sort of pullback here now. Use up plenty of time. Come back, there's a little nice little false break again. An impulsive move. Bit more selling in here than you'd probably like to see on the back here. But again, we know these little these leaders there that the whole thing's just congesting here, tightening up here underneath this little mark here. So looks okay there. Just the only thing I'm sort of seeing, I'm seeing a lot of these setups like this, and then they pop, have a 2 or 3 day move, and then they get twinked. They get after having a 2 or 3 day pop, they'll have a big sell down day. Like I think Cochlear was. This is a good example here. It did sort of had a nice little move, kicked up out of here, and then looks pretty good, ready to break out. Didn't quite break the high there, but then it gets to stay here, big sell down. So just seeing a lot of that pop and drop sort of activity. So yeah, I'd just be a little bit more cautious than normal there. I just keep everything pretty tight here at the moment. So yeah, that's pretty much it, Chris. Yeah, I mean, I think the theme there is to stick with the strongest names here at the moment, because they just keep re-emerging here. Keep an eye on those. Don't take them off your watch list too early. That's probably one of my big lessons this year is to keep an eye on those sort of stronger names there, because they do re-emerge. I'll go through a consolidation period and I'll come back here. So so keep an eye on those stronger names.
We're just looking at the charts that you've been putting up on the screen for us. It seems like 2 to 4 months is quite a reasonable time for them to take a breather, reload, rebuild the base, prove that they're not going to be falling further, have that congestion, and then as you're watching through them, looking for their telltales or them coming up in the launch pad, one or the other or both at the same time, you're then looking at that and going, okay, now this is a bit of a signal, and I've seen this many times before. So that's a good lesson for us to take into the weekend, is to review those leaders, look at those times of congestion. And I guess this year you've really been focusing on those common behaviors in that congestion and how to identify when that next leg comes. Is that probably a good focus of yours it's been this financial year?
Yeah, just to just say those strongest names there. I mean, like, I guess the one thing is you see them, like, we talk about it. I've talked about it for probably the last 2 years. Is that those leaders they often lead a lot longer and they go a lot higher than you expect. So they stay on the list for quite a while. But then, so that's the one thing that we've definitely noticed over the last few years. That's clear as day. So these trends, they once they're leading, they tend to run a lot further than everyone comprehends. It's a bit like this power trend at the moment. Like the US market kept going. Everyone's expecting it to come off, but it's not showing any signs of actually weakness. I think there might have been 3 or 4 distribution days there a while back, but then within 3 days, the volume it just powered. 3 days back up again. Volume was big. It's like, no, that's not coming up. That's like, same with the XJO, had the 300-point pullback, and then the volume just comes in, bang. That's not sort of...
It's not a weak market.
No. So it's telling you, you sort of got to just listen to the tape here a little bit. So, but yeah, the big thing is we know these trends, they run a lot further than you think. But the big thing is that you see these really, like the biggest movers, they will have a pause, they'll have a consolidation. And there's a good chance here. There's probably, I'd say 40-50% chance that they'll set up again and have another run. So we're seeing these movers that are up, they might be up 5 or 7 or 10 times. That seems crazy that they're up so much. But then they go through a pause and then they go up, and the thing is, the last leg up, if you go and look at some of those last legs, after it has a consolidation and a pause, next leg up can be really, really powerful. That can be the most sort of powerful there. I know with bull markets, like the one thing that if you do your ranges and Fibonacci's and stuff there, you see this all the time. And if you learn about how to square ranges, you'll notice that like a bull market might run for say 5 years, and it might do just say it's 2,000 points or something. So just say it's 5,000 points over the 5 years. The last year, or maybe even the last 9 months of that 5 years, that can be half of the range. So that you're building, and then for 4.5 years or 4.25 years, and then all of a sudden you come back down to the midpoint, and then it just rocks. The last leg up can be the most powerful leg in the whole market there. And oftentimes, I do look for this in ranges when I'm squaring ranges, particularly when I see stock that's been going down for a long time. The last leg down can be 50% of the whole range that's just been going for a long, long time there. It can be on the bull market. The last leg up can be half of the entire range as well, which seems crazy, but see it over and over again. So that's why you got to keep an eye on these strongest names there, because the last leg up can be super powerful and can be really aggressive. So yeah, that's why we got to keep them on the list a bit longer.
Well, it does also fit with many other interviews we've had before where you discussed sending trend lines and broken that down from indices to companies. But we'll leave that for the viewers to look at previous episodes and dig that one up, because we've taken enough of your morning. We'll say thank you very much, Gary Glover from Novus Capital.
Thanks, Chris.
So Gary's talked about a lot of that kind of research. There's a whole playlist on the right-hand side of that other kind of research, setups, springs, false breaks, high tight flags, all of that to the right. And he's also referenced his Tuesday report where he talked about Sonic in a bit more detail and the rest of the healthcare space. That playlist is on the right. And he's active on Twitter or X if you want his handle over there on the left.